Hey, what's up, Nomad Nation? Today I got a special treat for you. We're going to talk about riots and protests and the police. And no, we're not going to talk about that. Let's talk about high of day breakouts and setups that work and what it took for me to actually become a profitable trader using those setups. What to watch out for, when to buy, things that we're looking for as day traders, particularly just setups and high of day breakouts. Let's talk about that. Hey, what's happening? Tim with Nomad Trading. Today we are going to talk about charts and some patterns, the patterns that I use and that made me finally become profitable, and some of the things to watch out for, some other patterns that do work and things that you can do. Just going to kind of go over some setups and things. So hopefully that will help you out. I know what you're thinking. What is with this dude and the tank tops? And I know, right? I'm supposed to be wearing a suit or a tie or, super nice clothes and things, because that would make more people watch my videos, because then I'm more believable, like the guy sitting at his desk with a suit and tie, and you're willing to follow him and believe in him because he looks the part, But the truth is, I love the fact that I can trade the stock market in my tank top and my ball cap every day. I can get out of bed and shower and be comfortable. Plus, I got a super bad sunburn right now. I got burnt to shit at the lake yesterday because I'm not smart enough to wear sunscreen. So that's what you're following right now, and trying to learn how to trade with your money is a guy that's not smart enough to wear sunscreen at the lake when it's 95 degrees. So what does that say about you guys? Anyway, without further ado, if you haven't already, like and subscribe. We're going to jump over into my computer and talk about what was going on today and some different entries and exits that you can take and what to watch out for, why things work and why they don't, few patterns and setups, etc. Let's do that now. Okay, first off, let's talk about ENOB. This thing went crazy this morning. Went from, let's see what it was yesterday. This thing was trading down in the fours yesterday, and around the $4 range, and went all the freaking way up here to almost $20. $19.39 looks like the high. So almost $20 from $4 yesterday. That is insanity. So let's talk about the best play on this, by the way. If you could actually find shares to short, I don't know, how advanced a lot of you guys are in this trading journey, but to short a stock means that you make money on the way down. You borrow the shares, sell them immediately into the market, then you buy them back lower. That's the plan, and you pocket the difference. So the best play on this stock and many stocks like this would be to short it. The tricky part is, first of all, finding shares to short is nearly impossible. So you're going to run into that with almost any broker, especially the brokers that have lower minimum balances and things. It seems like the brokers that I've seen that have shares to short more often on these low float momentum plays are the brokers that typically have like the $30,000 account minimum, $25,000 account minimum, just higher dollar brokerages for whatever reason. So I've talked to some traders that are really big into shorting that make a lot of money doing that, and they always seem to have shares to short. And I've asked them, what brokers they use, and typically they've been, well, first of all, they have multiple brokerage accounts, so they search all those different accounts and see if there's shares at any of them. But they also typically have a higher dollar account, higher net worth account brokerage. Anyway, so the best play on this would have been to short it. You could have shorted it at the open, which would have been right in here, and it did nothing but drop. If you would have got shares to short here at $13, it would have been a super easy short because it didn't at any point after the open spike back up and retest highs or anything that would have shaken you out. It did nothing but fade the entire day all the way down under $6. So had you got shares to short, it would have been a lot easier to hold it all day and ride that one out. If you were going to play it pre-market, which is more risky, obviously, with thinner volume and moves faster, etc., you could have bought like a high of day breakout right here, and scalped it. Could have scalped it a few times in the pullbacks. So there was a few plays in it, but it really largely just moved too fast to do much. And for me, it would have felt like chasing. When I saw it this morning, it looked like I would be chasing it if I did anything up here, and it never did come back and have another breakout after that. So the play on that would have been to short. And like I said, oftentimes the highest odds setup there is on these low float stock momentum plays is to short it. The problem is, number one, you can't find shares to short. Number two, you can get burned really fast, blow your account up. If you short somewhere in here and it ends up going up another $5, you better hope that you shorted small or that your account is massive, or you're going to blow your account up because you don't know where it's going to stop at. A lot of people like to short at high of day, which is why we'll start talking about breakouts here in a second and why that works. But anyway, this play would have been a short. Let's see. The one I talked about this morning, one of the ones I mentioned, I think that was one of the ones I mentioned. And then DGLY was the one I was really looking at this morning pre-market. And I thought this one was crazy because I think they had an offering, I believe. Is that what it was? Let's see. Yeah, public offering. So the stock comes out with news about body cams, and it gaps way up, rockets up here, gaps way up. Then it has news of an offering and sells right back down, which the pattern today was just crazy. Not very often do you see a stock rocket up from the twos to the mid fours, then come right back where it started on news of an offering, and then end up coming back up. And I think they had more news, and I think this is where I was talking about it pre-market this morning, if I remember correctly, as it was starting to continue up. And you could have played that little bit of a bounce there. Right here, it formed a little bit of a wedge, and you could have played that. But, it had a few entries in it. Where was I? Had to stop. My children were fighting in the other room. Gotta love that. So, anyway, this stock was, this DGLY had some opportunities, but it would have been more difficult to trade because it's so all over the place. This thing with the big drop there, and then it ends up, coming up, but then dropping back to VWAP. Climbs all the way back, but another big drop. It just has a lot of big drops. So for me, who is more long biased and looking for breakouts, it's a little more risky because every time it's starting to get up to that range, I don't have as much confidence in it because I'm, worried that it's just going to drop back down on me before I get a chance to take my profit out. So it had some opportunities. It was definitely up pretty crazy on the day. But it's just one of those ones that's pretty choppy and difficult to get confidence in and trade as a long trader when you're scared there's going to be big drops right after you go long. So that's kind of that one. Excuse me. BORR, Board Drilling Company. This one, and this is going to be an example of like somebody had like I said, commented in one of my comments about dip buying, and dip buying is great. But the problem with dip buying, in my opinion, when I've tried it and lost money, I do it sometimes, and sometimes it's the right play. But there are oftentimes, especially as a new trader, where you're trying to dip buy, but if you don't really know what you're doing, your risk is less defined. So, for instance, let's see, here you're trying to dip buy it. Well, you don't know if it's going to stop there or if it's going to go all the way back to VWAP. So what happens if you're trying to dip buy it and then it goes down here? Are you going to panic and get out at the low? How long are you going to hold it? What is your stop set at? Things like that. And to me, there are good times to dip buy, and it can be a great play, especially if, for instance, after the high of day break, which is what I like to play, for instance, right here. So we got the high. I'll walk you through this. You got the high of day here. It fades back towards around VWAP and the 200 moving average, which is the blue line that I have on my screen. It starts curling up, and then it ends up coming up and consolidating right at that high of day. So that's a great thing if you're a trader like me, because it's consolidating right there at that high of day. So I know if this thing starts to break out, that's where I want to take my trade. It's a lot more defined risk, because had it dropped right here, okay, there's no trade. It's dropping, it's going to likely fade back. But when it's curled all the way up and consolidated at the high of day, and then you get this nice big green candle with decent volume on it, you know that that's a great spot to enter. And you do have to be quick. My strategy is scalping breakouts. That means that I'm literally buying it when it breaks out, which can be risky because you don't want to chase it. And that's where experience comes into play of what is the difference between chasing versus buying a breakout. Well, for instance, here, you're not chasing because it's had a nice consolidation period. That's the difference. Had this curled right back up right here, I'd be a little more likely to watch it for a second and to make it really confirm the breakout before I bought it. Because when it, had it come all the way down and then curled right back up, then it feels a little more like chasing, kind of like on DGLY, the way it curled up here and then came right back, sold right back off. That to me, it's kind of like, how extended the move is for. That's about the best way I can think to put it. So if you have consolidation here at the breakout level, then you get the nice strong green candle. Great time, but you got to be ready during this whole period of consolidation. You got to have your order ready, everything ready. So when that green candle starts to jump up and you're going to place your order a little bit higher, so, on your level 2, for instance, if you're making an E-Trade order, you could use a market order, but then you run the risk of being filled wherever the market maker wants to fill you. Or you could put your price, say the breakout level is right here at 211. I might put my price here at, 217 or something like that. So that, and then I'm watching level 2 right here. And as this level 2 comes up, and this is why level 2 is important, when it gets to that breakout level, say 211, when this is at 211, and usually you'll see the ask will get quite a few big players on it, and that's because people love to short the high of day. So that'll get eaten up, and this is all happening in a matter of seconds, and that big ask will start getting it eaten up, typically is how it goes. And the second I see it starting to get chewed up and it's about to hit that 212, I'm just punching that buy button, right off the bat and trying to get filled at 212, 213, 214, wherever I get filled. And all I do typically is watch it from there. I'm watching the level 2 for big sellers over here. I'm watching for big bidders to show more strength, and typically I only hold it a couple minutes and I'll start taking some of the position off right away and taking profit, because you don't want this to pull back and come all the way back down here and you end up a winning trade turning into a loser. Now my strategy is a little bit more scared than a lot of people. Most people would prefer to just hold it and keep going, and that's great. And sometimes I do that with part of my position. The ideal setup like this would be to take the trade, and then after it gets all the way up here, you've got 20 cents. In theory, you're going from around 211 if you played it perfect, which you're not going to, but if you did, 211, and it gets up to 231. That's 20 cents. So for me, if I can get 15 cents out of that, I'm happy with that. If I can get 15 cents at, a couple thousand shares, that's $300 in 2 minutes. So, and it's not that expensive because you're talking about 211, a couple thousand shares, $4,000, $4,500, not a ton of money, and make $300, and that's pretty good. Most people don't make $300 in a day. So if you can nail that in a couple minutes, and then here you go, let's say you got out of it and it starts to curl back up, and what do you have? Again, you have another high of day break right here, and this is kind of a bit of a cup and handle setup, and it's comes down and tests the high of day, the previous high of day, and then comes back up and confirms it. So here's another spot where you can take a trade as it's getting up to their 232, and you take that trade. And you got to realize with experience, and I still screw this up, I'm not going to lie, it'll come back down and fake you out. And this happens a lot. So you just know that a lot of the times on a high of day break, it'll come back down and test it, and then keep going and test it, and then keep going. But there's a big fine line, the more experience you get, between a little pullback and knowing when to jump out versus, a big pullback that could have ended up continuing on down. So it's definitely a risky business buying the breakouts. But to me, as far as scalping little bitty tiny moves, 10 cents, 15 cent moves, there's no, from what I've done and what I've studied anyway, higher odds setup than when you have a consolidation at the high of day and it breaks out. That to me is a pretty guaranteed win right there. If I get in and out, quickly, that's a pretty guaranteed profit. After that, same thing. You let it curl up and you take it. And at this point, you're taking the second breakout. It's getting a little bit more risky. The more things happen, the more likely it is to not replay the same pattern, if that makes any sense. So like the more it pulls back, the more likely you're getting closer to a big drop. Typically like the third time, like a lot of people say that they won't buy the third pullback on a bull run intraday. So especially because that at that point you're usually getting later in the day, and midday there's not as much volume. As you can see down here, big volume in the morning, big volume late, but less volume midday. It's just kind of grinding along. So you get a giant seller or a giant short seller, and they can drop the stock pretty good. So anyway, that's kind of this stock. There would have been an opportunity there, another one there, and could have scalped it there. And then nothing really, because it came back, fought its way back up, but didn't break the high of day. And then here you got a high of day break, but this is after hours, so it's a little more risky. You can trade after hours if you want, but it's a little bit more risky. You'll get a lot larger spread. The spread meaning the distance between this can, if you don't have a lot of volume after hours, which typically you don't. This one's actually pretty close. The spread's only 1 penny, the difference between the bid and the ask. So you can get in and out of that. It has quite a bit of liquidity, even though it's after hours, which is surprising. But that's where you run into problems. This thing might be trying to break out again. After hours also, because of that spread and because of how thinly traded it is, sometimes you'll see the craziest moves come after hours. People just keep smacking that ask and it'll jump up by 10, 20 cents at a time. It can get pretty crazy. Then we got, let's see, WLL. This one's very similar to that last one we looked at. So it opens up, shoots up, pulls back to VWAP. Then it just kind of grinds through midday. And then we get a push up to the high of day. And again, this is people that say that high of day breakouts don't work. I beg to differ, because we're looking at several examples today that I'm showing you from today. They're not like old stocks that I'm cherry picking. These are all the runners today that are up 100 and some percent. And you'll find multiple times on pretty much all of them where the high of day break works for a scalp. Does it work? every time? No. Do you have to be very careful that you're not chasing it? Yes. Do you have to be good at cutting the loss quickly? Yes, because if it breaks this high of day right here, and then you quickly see it shoot right back down, I'm getting out of it right away. I might not even hold that for 30 seconds. If the very next candle is coming right back down, because sometimes you'll have high of day fake outs where it gets up to the high of day and looks like it's going to break out, then it pulls back and fades the rest of the day. So you got to be very careful what you're doing and be having your hand on the sell button to get right back out of it. Or hotkeys is preferred if you have hotkeys with your broker like CMEG. E-Trade has like a quick trade button, but I didn't find it very helpful, honestly. Wish they had hotkeys. And if they do have hotkeys and you're watching this, let me know. Because if they do, I'm unaware of it. Anyway, so again, same thing. It gets up to that high of day right there, 250 or so, and it breaks out. If you want to talk about why this works so often, why it's a high odds play, it's because as it's getting to that high of day, there's people like me that are going to take it long. There's also people that are shorting the high of day. People love to short high of day. It's one of the biggest plays that there is. Shorting the high of day is also a pretty high odds setup, but not necessarily like in the short run. Like for me anyway, it hasn't proven to be that great unless it was morning. You can get a nice spike in the morning and short that and fade all day. In the afternoon, a lot of the times, if it's got the strength to stay up here and curl up and then break out, that's not somewhere I'd be shorting. But if you were short over here, for instance, in the morning, this might have been a good place to take a short, and then it starts grinding up and you find yourself losing the profit that you were making. What are you going to do when it starts to break high of day? You're going to cover. So when you get a bunch of people that are going long on the breakout like me, and then you add into that all the people that were shorting it, they're going to cover as it breaks high of day because everybody's thinking to themselves, how high can this go? This thing can move fast. I don't know how high it's going to go. I need to get out of it. So you get a bunch of volume with people covering their shorts and people going long on the breakout. So again, hold it a few minutes, get out, take your profit, 10, 15 cents, 20 cents if you're lucky, and then watch it. And then it pulls back and breaks high of day again right here. And then if you'd taken a position there, I would have maybe gotten out and then got back in. It just depends on this little consolidation. I would prefer it shoot up like it did down here. But anyway, you wouldn't have really been underwater, so you wouldn't have had a real reason to stop out had you taken that trade. And again, you take it for 10, 20 cents, get out, then it comes back down, goes back, breaks the high of day again, and here's where it's getting a little more sketchy because there's already been several high of day breaks in the afternoon, but it would have kind of worked. You just don't want to hold it too long. In this case, it wouldn't have been a very good play, and this is why I don't hold stocks very long, because it would have pulled back and I would have been scared that it was going to fade back down. But again, like we said earlier, a lot of the times on these breakouts, they'll come back down and test the high of day. So a lot of times also, if I'm not buying it right there, sometimes I'll miss the breakout. And that's a good opportunity to watch and see if it confirms the breakout. As they say, if it came back down here, you could buy this dip. This would be a decent dip buy. Putting your order at the high of day there. And if it fills and it comes back up, great, you're making some money. Take it for another scalp. If it keeps going down, then you need to hit your stop loss and get out. But anyway, not as good of a play right there. But you could have done it for a little bit of gain. Again, right there, high of day break. Take a little scalp. Comes back down, just like we just talked about. Confirms it, loops back up. High of day break again. And at this point, when you're getting a high of day break with only a few minutes until the closing bell, which is this case, that's going to be, a lot of times it'll move even quicker. You'll get a lot of volume coming at the end, a lot of shorts that are like panicking to get out before it goes into after hours. But then you can see how quickly it can move after hours and sell off and erase that entire move. So you don't want to be caught getting greedy and trying to hold it too long. Let's see what else. That's the overall market today. So it gapped up and it's continued to grind higher, which is absolutely insane to me. Like, I just can't get over the fact that this is the overall, this is a SPY ETF, which is a good gauge of the overall market if you're looking for a gauge of the overall market. I can't believe that this was the all-time highs over here for SPY, around 339. It comes all the way down here from the coronavirus to 219. And then somehow, with the country just getting back open and so many companies failing and record unemployment, and like 40 million people unemployed, and yet somehow it's continued to grind up through the 200 moving average, all the way up here, like 5%, less than 5% off its all-time highs. That is mind-boggling to me, and it honestly, it's beyond all reason. I don't understand how the stock market can be getting anywhere near all-time highs when we have the current unemployment situation. Even though they keep buying junk bonds and doing everything they can to bail it out, stimulus packages and buying junk bonds, etc. But still, I can't believe it's up where it is. But it's good for retirements and good for day traders and whatnot. So hopefully it keeps going. Other than that, I think that's about all I got. If you look over here, though, this was something I was going to point out. Look at all these stocks. This is crazy to me. You know, the overall market's up, which helps. But on FinViz, which is a great free scanner, if you're looking for a free scanner, FINVIZ, FinViz, on the top gainers, this was a little bit earlier today, but still. Look at all these stocks that are up over 100% or near 100%. That is mind-boggling. Hardly ever do you look on here and you see, 20 stocks that are over 50% up on the day, and you got 1, 2, 3, 4, 5 stocks that are well over 100% up on the day, with volume also, not just some tiny penny stock, but like these are real momentum plays with real volume, 15 million, 50 million, 117 million, 185 million. Real stocks with real volume up over 100% on the day, over 90% on the day. Just a whole list of them. It's just a pretty crazy day. So lots of different plays, lots of ways to make money in the market today. If you have any questions or comments, put them down below. I do answer every single question, comment personally on the channel. I'm very excited, guys, that if you look over here at my channel, we're at 491 subscribers. So pushing 500 subscribers. That is so awesome. I can't thank you enough for the support, all the kind words in the comments, for you guys watching everything. So awesome. To break 500 subscribers is going to be awesome, because I'll be halfway to my goal of making my first dollar with the Nomad Nation. So my first YouTube dollar. You can't make any money or be monetized till you get to 1,000 subscribers and 4,000 watch hours. I'm well over the halfway mark on watch hours, but my subscribers is still under 500. So if you like what you see, make sure you subscribe if you haven't already. Give me a thumbs up. Click the little button. Tell me what you like or what you don't like in the comments, and I will respond. Give me some ideas for future videos, and we can talk about whatever you want to talk about. Until next time, which will probably be tomorrow, I'll jump back on here, maybe pre-market again for a live, and make some more content for you guys. Hopefully I'm helping. Let me know if I'm helping or not and how I can help more. Until then, peace.